Welcome back to my channel. It's Dennis from Simplify Investing. Coming at you with a video today talking about the huge pullback in tech and just the market in general today. So if you're interested in it, I would really appreciate it if you hit the like button. It really helps with the YouTube algorithm. And let's get started. So right here I pulled up Yahoo Finance. Of course, they're going to talk about one of the worst days since July. All tech was down. I mean, up here we're looking at futures. Even the futures are down for the day, right? All tech was brought down. Anything really was brought down, right? I just wanted to explain a few different reasons why I believe the market's getting dragged down, right? So let's start off with COVID, right? COVID's still not over, unfortunately. As much as we all want it to be over, it's not. Europe overall is experiencing a large second wave of COVID, which is unfortunate, but it is one of the worst countries. Is the UK, unfortunately, as you can see here. They were averaging about 800 to 1,000 cases back in August, and as you can see, they've been just shooting up, and up, and now we're at 6,000 cases in one day. So that's a little bit worrisome, and this is not just in the UK. I just brought it up in the UK because Prime Minister Johnson is actually debating if he should shut down the country and go back to lockdown, which is really nerve-wracking for investors because lockdowns are just going to cause more mayhem in the markets, right? So next up, I wanted to talk about leverage. A lot of retail investors, as we all could tell by Wall Street Bets. If you're not familiar with Wall Street Bets, it's a subreddit on Reddit. What they do is they like to YOLO their money into deep out of the money options. Sometimes they make a lot of money. Sometimes they lose all their portfolio. And if you go on there, you could see a lot of people who go from a $5,000 account to a million and then back down to like negative 2,000. It's really funny, but it's unfortunate. A lot of these people are taking a lot of leverage and a lot of risk, and on top of just using options, they're also using margin. I think a lot of brokers right now are charging very cheap rates for money. I think Weebill's charging about 2%, and this 2% is very attractive for new investors, and I think that's a little bit worrisome. As you can see here, they made a survey. About 1,000 people consisted in this survey. 23% answered yes, I have purchase option, and 10 answered yes, I have bought on margin. So it's a little bit worrisome. This is more than we ever usually have in the market. So that's a little bit worrisome. Next up, I want to talk about the news article that came out about U.S. banks. They've been caught a lot of suspicious activity reports, the SARs. These are filed by banks with government regulators that indicate the banks were concerned the transactions would help suspected terrorists, drug dealers, corrupt foreign officials, and other bad actors move trillions of dollars around the world, as well as investment frauds. So this is a big issue, mostly to the banks overall. When the news came out, this was on September 21st, as you can see up here. All bank stocks just took a beating. I mean, I saw Wells Fargo trading at its all-time low, and just all banks were just taking a beating. This is not, unfortunately, this is something that's been going on, but this report really exposed how much money is really being, in these transactions, with being 2 trillion. That's a lot, right? Also, I did want to mention that it's been almost 6 months since the CARES Act has passed. The CARES Act, it helped with unemployment benefits, the UI, it helped with stimulus checks, it provided government with a little bit more money, et cetera, et cetera. This was passed on March 25th, and 6 months later, we still have no word of a second stimulus check. About 2 or 3 months ago, the market anticipated another round of stimulus, but that never ended up happening. Small business loans also did not go as well as the Fed anticipated with the Main Street loaning program. Next up, I wanted to talk about what Mitch McConnell said about the HEROES Act. The HEROES Act was the next bill that the House of Representatives passed, which was full of Democrats. They ended up passing a $3 trillion bill in order to continue extending the unemployment insurance, stimulus checks, and a few different other things that are going to be thrown in there. Pretty much as soon as this bill arrived to the Senate, it was dead on arrival. As you can see here, Senate Majority Leader Mitch McConnell suggested that the timing was not right for another bill, but with just a few days to go before federal unemployment benefits run out, that appears to have changed, which it never did. It is unfortunate. This is another document I wanted to bring up. This is probably one of the biggest reasons that we are seeing a decline in the market right now is that it's an election year. Election years are very volatile. People are nervous. Wealthy people aren't sure what to do. We have two different parties. They think very differently. Trump obviously prefers lower taxes, lower corporate tax, lower income tax, and he doesn't want to change the capital gains. While Biden, on the other hand, wants to increase all of those and do the opposite. And he specifically wants to target the 1% of America and increase their taxes tremendously. So this is bringing a drag down on the home market as well. I mean, as you can see here on the right, capital gains and dividend tax, Biden wants to raise it. This says 43.4%. I don't think it's that high. I think he wants to add it to personal income. So whatever your personal income tax bracket is, he wants to add it to that. I think 43.4% is a little too high. But there's also Pamela Harris. She also suggested that for every $3,000 of stock that you sell, you have to pay a $6 tax on that. So that's another way they want to tax people who are trading stocks and equities, right? As you can see, corporate tax rate, 21% under Trump, 28 under Biden. And I think he even mentioned that he wants to bring it back to 35 potentially. I think he said he wants to work his way up. Income tax, again, much lower under Trump. So there's a lot of uncertainty with where the market's going to head for these next few months. I also wanted to bring up the whole UK and the EU Brexit deal, the trade deal that's been going on for a bit. Unfortunately, the pandemic has slowed down trade talk. But this right here, as you could see, was from September 10th. They still haven't come to a conclusion with what they're going to do. I think they have until January to decide. They're still going back and forth. As you see, a few key developments here. Challenging areas remain. We'll see where this goes, but I think this is something a lot of people are forgetting, and it still has a lot to determine, right? Also, I just wanted to show you this. This was a meeting that they were going to do about a day ago, but one of the guards ended up testing positive for COVID, so they had to cancel it and postpone it, and everyone had to quarantine for 14 days in order to ensure nobody was sick. It's very unfortunate, but I think we're going to continue seeing volatility. Obviously, Trump might be more willing to tell the Fed to increase quantitative easing, in order to benefit the market right before the election. I also do believe deep down that we will see another round of stimulus checks right before the election. I think they're very incentivized in order to do so. I mean, they don't have much time to do this, but I do see this happening. Thankfully, we also did postpone the lockdown of the government shutdown. So hopefully COVID cases start declining in the United States. I really am optimistic about this. So again, if you really enjoyed this video, hit the like button. I would really appreciate it. Hit that subscribe button. I would love to hear what you guys have to say in the comments down below, and I'll catch you guys on the next one.